So I'm going to preface this by piggybacking on what you said about Sweden, the investing culture there. And not only does it lend itself to building great public companies, but it also lends itself to building great stocks. And what I mean by that is that there are these particular type of company, a holding company or a conglomerate or a serial acquirer, whichever way you want to kind of call it. But basically, these are really incredibly investor friendly stocks, essentially because they're run by investors. So Berkshire Hathaway is the obvious example. Warren Buffett is arguably the greatest investor we've ever seen, and he's laid out a blueprint for so many companies to follow in that same shape or form in one way or another. And then when you look at the top companies by market cap in Sweden, an awful lot of them fit into that shape or mold. This episode of the pod is proudly sponsored by Cadiz Inc. It trades on the NASDAQ under the ticker CDZI. Cadiz is a transformative water resource company that is making a significant impact with its $5 billion in water assets and $173 million in cash. The company is currently constructing a massive water pipeline, the largest in the southwest, which is designed to ensure reliable water access for the region. Cadiz is actively combating the water crisis with game-changing infrastructure projects and strategic partnerships. Under the leadership of visionary CEO Susan Kennedy, who previously served as Chief of Staff to Governor Arnold Schwarzenegger, Cadiz is set to provide innovative solutions and substantial value to both its shareholders and the communities it serves. Always do your own research before making any investment decisions. The information provided here is for informational purposes only and should not be considered financial advice. Hi there and welcome to Stock Club. I'm Mike and joining me today is MyWallSt's chief investor, Emmet Savage. We got a special episode this week. We're going to talk all about, first of all, our new product coming out next week called Nexus II. If you know anything about Nexus I, you should be very excited for this new product coming out. We have an unbelievable list of internationally diversified stocks. And if you want to hear more, just email in at pod@mywallstreet.com. But we're going to talk about it in much greater detail throughout this show. So make sure to tune in. Emmet, how are we getting on?
Hey Mike, how's it going?
I'm good. We're so this is going out on Thursday, which hopefully there will be a new US president. We're going to be the only podcast in the world that isn't talking about it, I think.
Is there any event in America that could leave exactly half the nation thoroughly disappointed and the other half the nation ecstatic? I've never seen an event really that is more driven by who do you like the least, because you're going to vote in the opposite direction.
Yeah. So we don't know. This is going out. We're recording this late Tuesday. So we don't know what's happened yet. So I think it's best we leave it at that because yeah. Or we could make big predictions. That always goes down well.
Well, the problem with a prediction is it's tantamount to announcing who you're up for.
Yeah.
It certainly seems to be the case in America that you certainly wouldn't predict the candidate that you're least in favor for, because it seems to be order of the day that all you do is pump the person who you want to be president. So I just think it's a real pity, because I think the tone of elections have really gone down. I was reading in the Wall Street Journal the amount of money spent on this year's election by both parties, pretty much neck and neck, and it's absurd money. I think the cost, this expenditure per person in America is 30x what the expenditure is by political parties in Germany, which was used as the case study, because apparently there's a reasonable amount of spend used in Germany in the elections. So for every dollar spent in Germany per person, it's $30 in America. So really, a lot of those metrics kind of show the system. Well, it's hyper competitive. It is the most powerful job in the world. There's no debating that. But it's a little bit of a shame that it's come down to an election where you're deciding who do you least like. And of course, a lot of people just come to the table with that already decided, and then the swing states seem to bring it over one side of the line or the other. It's an amazing system.
It is. It's nuts. Like how it can come down to a small town in Wisconsin or Pennsylvania to decide the fate of 350 million people. But we won't dwell for much longer on that. We got a special episode today. So Emmet, do you want to introduce it there? It's kind of a follow on from this time last year.
This is true. Actually, I thought it would be very interesting for us both to pick and discuss one of the 15 stocks from Nexus I that we think has the potential to grow at least tenfold from today's share price. As it happens, I'd be happy to buy an equal stake in all 15 of the stocks that went out in Nexus I and go to Desert Island for 40 years, because I have a high degree of certainty that one or two of those 15 will go on to supernormal growth. And that certainty comes from the fact that we used every piece of human and computer intellect at our disposal to find those stocks. And they're businesses from all over the world with defensible business models in the early stages of addressing a giant long-term opportunity. And as we said back a year ago, I'm sure, and when we were promoting the product and we were promoting Nexus, there's 58,000 companies listed on 60 exchanges around the world. Just one is required to change your life, and Nexus was built to find it. So I just thought it'd be fun for you and I to not necessarily pick our favorite, but to pick one of the 15 that we would be very happy to throw 1,000, 10,000, or even more into, and just leave it there for the very long term.
Yeah. And actually, I was thinking about this as well. We did this similar podcast this time last year with just one stock. We broke it down, which is cameras, which obviously is in we don't mind giving away because it's in the public domain already. But if you missed that episode, you can go back. Everything we said is pretty much relevant. We're always talking from a long-term basis anyways, so there isn't anything too outdated there, bar maybe certain facts and figures. But what's great about this is it's a little pat on the back too, because I think cameras is up about 70% since that episode published.
Nice, great.
Yeah.
Yeah, that's right. I know cameras well. I don't remember the podcast. Thought it was very funny. Recently, I saw Graham Norton was asked about when he met Britney Spears, and he said, "I have never met Britney Spears." And the interviewer said, "You have, you did."
On camera.
And he said, "No, I guarantee you I've never met her." And then he was shown video of Britney Spears on his show. It reminded me as well of when the Beatles were interviewed by an author here in Ireland about their one and only gig in Dublin. And the four of them were like, "We were never in Ireland. We know that much." Next thing, there's photographs produced. Go, "Yes, I'm sorry, you were in Ireland." Well, anyway, the same goes for me now with cameras. I have no recollection of that podcast, but I do know it's a great stock. I love it. And I do know it's up 70, 80% in the last 12 months. So nice one. Well done us. Pat on back, right?
Yeah. Okay. Do you want to kick it off with your stock first? Because I know you're going to talk a bit about Sweden as a country and then as an investing culture.
Yeah.
And I'm going to
you're right.
I'm going to piggyback on that and just say, what he said. So it helps my case.
Oh,
if you
good.
go first.
And it makes, okay, good. Because I don't know what you're going for. But as some of our listeners know, I borrowed 3 of the original Nexus I stocks for Horizon, the service I run. So I've already purchased 3 of the 15 or 20% of the businesses that we're choosing from for today's podcast. So I'm going to exclude those 3 and bring the original 15 down to a list of 12. And I'm going to go with an absolutely incredible company that's listed in Sweden. As you said, it was published to Nexus just in May 16th of this year. So what are we at? May, June, July, August, September, October, November. So only 6 months ago, we published this stock, less than 6 months ago. It's up about 50% since then, but I really believe we're in its earliest days. I think it's a brilliant business. It's one I want to own. I don't own it yet. The only stocks I buy are published to Horizon, as a lot of our listeners know. And to build attention, I'm going to give a few facts and figures from good old-fashioned Yahoo Finance. And for our listeners' benefit, 1 Swedish kroner, Sweden is not yet in the Eurozone. It's maintained its own currency. So the Swedish kroner is about 10.7 US dollars. So very easy mathematics. When you hear a price in Swedish kroner, just divide it by 10 and you're in the right ballpark for the dollars. So a share price of this business is 330 kroner, so say 33 bucks. Its market cap is 21 billion kroner. So it's about a $2 billion business. It has a PE, which we don't divide by 10, but it's a very big PE. It's 239, which traditionally would say,
I wouldn't mind dividing that by 10.
No, this is true. But the thing is, if you just think about the mathematics of price to earnings, so just for those listeners who aren't overly familiar with the metric, it's the share price divided by the earnings per share, or the bottom line profit per share. And when a business has just broken into the profit zone and has been lossy for years and has just gone above the waterline, that profit is very small. So when you divide any number by a very small number, you get a huge number. And when the PE is very high, it can tell you that the business might be early
Yeah,
in its
absolutely.
profitable journey.
And that goes
So it's not
for a
one.
lot of metrics where they're not exactly relevant for a company depending on what stage in the growth cycle it's in.
Yeah, absolutely. I mean, the P is, it's funny. I remember years ago when I was about 16, there was an ad in the Irish Times and it said that there was a hotel there in Dublin called Buswell's. It's still there. And some guy from Davy Stockbroker was giving a course on how to analyze stocks. And I went, and it was all about P and pencil and paper. And I remember thinking, I don't know if this is the right way to go
Yeah.
about finding that next big thing, because I was infatuated by some of the new tech darlings of the time in the mid 90s. And certainly you wouldn't have found those with PE, they would have been written off immediately.
No.
Anyway, so the company, yeah, right. So where am I? Yes. So I just may as well tell you what the name of the business is. It's called Bonesupport AB, all the one word, Bonesupport AB, a stock that I do not own, but absolutely love. Now, 5 of the very first 9 selections from Nexus I. So when Nexus I launched last November, there were 9 stocks at launch. There's going to be 6 at launch next Monday in Nexus II. Um, and and Bonesupport was not one of the first 9. Sorry, 5 of the first 9 were Swedish companies, and Bonesupport is the 6th Swedish company that went into Nexus. And by the way, Mike, as you said, we spoke at length about this before, but Sweden has a unique investment culture. It has high levels of share ownership as a result of really good financial education. It's a country with great economic stability. There's government incentives for people to invest in the stock market. It is the perfect environment for individual investors, as far as I'm concerned. And on top of that, the country is known for producing high quality companies that are supported by local investors because there's all these incentives in place to buy in the local stock exchange. So Sweden is a great country. It's a global role model. It's always in the top 5 highest performing stock markets, and that includes the United States and Canada and Japan and all those other places. Sweden is an outlier when it comes to, I would say, smaller countries that you just wouldn't expect to be such an outperformer. But
Smaller
there you have it.
countries
So
and Europe especially as well. Just in terms of
yeah,
investor participation
yeah,
in the stock market amongst adults in Sweden, or even like there's an awful lot of kind of bequeathing shares to younger people as well below the age of 18. It's just from a
yeah.
very early age, it's instilled in them. And not only that, but they will invest in Swedish companies predominantly as well. It's actually why Sweden has the only kind of, I won't say functioning, but successful IPO market at this stage in Europe. Everywhere
That's
else
right.
is declining significantly, and Sweden is going up and up and up.
That's interesting. I didn't realize their IPO market was on the up, but I am not one bit surprised. And John Tyrrell and I were up in Stockholm probably 6 years ago when we were looking at NASDAQ's exchange up there, known as the First North Exchange. And we met the CEO of the exchange, and we were there for the floating of an Irish business called Zootech for Paddy's Day, St. Patrick's Day. And really the professionalism of the whole setup. I don't mean the exchange, I mean the entire country. And I'd love to see Ireland do something similar. I could go off on a rant about that. I'd love to meet the Minister for Finance about it. It doesn't seem to be, as they say, the stone in the shoe at the moment. But it is something that Ireland could differentiate on, because we also happen to have produced some very good businesses in the areas in which we are known for. And some of them are delisting, which is a real shame, if you ask me, or at least moving their listing exclusively to America. But look, that's an entirely different podcast. Let me go back to Bonesupport. So Bonesupport is an orthobiologics company. So what it does is it develops and sells injectable bioceramic bone graft substitutes for the treatment of bone voids in Europe, North America, and internationally. So it's a very specific niche business. And just 20 minutes before these mics went live, coincidentally, I was speaking to my best pal who works in BlackRock Clinic, Mr. Philip Brady. He's a master surgeon, and he and I had a really good conversation about the whole area of injectable bioceramic bone grafts. And he explained to me the specifics about this particular industry, for the sake of me not divulging how much of a idiot I am on the matter, I'm not going to try and regurgitate what he said, but it's known by people who know these things that Cerament bone void filler. That's the main product of Bonesupport. It's Cerament, Cerament, which they spell in all caps for some reason, and it's an injectable, moldable, and drillable synthetic bone filler. And then they also have a product called Cerament G, which is I think it's called Gentamicin injectable ceramic bone graft substitute. And then they have another one called Cerament V, which is a different type of injectable synthetic bone void filler. And they all have specific qualities and attributes that are necessary for different procedures. And it also develops preclinical product candidates to promote bone regrowth. And it's really looking at the industry of trauma and revisions and oncology. And they have products for bones in the foot and problems due to diabetes, but they are actually producing a product that's used by surgeons like Philip, like Mr. Brady, every day. And it was founded in 1999 and is headquartered in Lund in Sweden. And before pressing on, I'd like to read an excerpt from the nutshell section in the Nexus write-up. So all the Nexus write-ups have a very, very short exec brief at the top. And this is the one that was written for Bonesupport here when it was published there in, I think, May. So Bonesupport's revenue for the 4 years from 2020 up until now, plus the most recent trailing 12 months, has compounded at 50%, which in its own right sets it apart from 99.4% of all other floated companies. Add in an almost 64% return on equity, and the company's current scorecard on these two metrics is the stuff of lore. In recent years, revenue acceleration has been due to its Cerament G product, which received FDA market authorization for the treatment of bone infections in May 2022. This is the first injectable combination antibiotic bone graft substitute designed for single-stage procedures. So that's very technical speak, I guess. But what we can take from that is that the financial metrics of this business are absolutely elite. It's a banger of a business. It's a wonderful business. And even virtue of the fact that share price is up. And it does look expensive. I think there are 3 categories, I guess, of reasons that make it easier to understand if you're listening to a podcast as to why this is a good business. So I thought it would be interesting to break down Bonesupport into 3 very simple sections. 1, its product and market potential. 2, its financial performance and its trajectory, the rear view mirror and the horizon. And the third one is upcoming approvals and expansion opportunities.
Yeah.
Because as much as we can tell a business has been great, we also want to feel reassured that they are readied and primed to go into a much bigger opportunity. And that's why we look for businesses. That's how we find 10x businesses. It's lovely to see they've proven themselves, but they're going into a greenfield opportunity.
Yeah, and I think especially for stuff in the medical field like this, you mentioned the FDA approval in 2022, and you can see like the direct link between that and the stock price since.
Yeah.
And
that's right.
There are always these kind of inflection points of where we got X approved or we got Y approved, and then kind of a rocket ship from there. So I think that's a really important point to isolate, as if you look at this kind of business or any similar kind of business, what's on the horizon or what's got recently approved or what is in the kind of approval process. And it's why there's such volatility in these kind of biotics as well, because it's not a guaranteed yes or no.
You're so right. I mean, on that very point, Mike, I mean, what I would say to our listeners, if they're already intrigued with Bonesupport, and honestly, you'd want to be some medical geek to go, yeah, I love this. But if you want to love this product, or at least look in that rear view mirror, and if you want to see what unreal growth looks like in the real world, go to Google, type in Bonesupport AB space IOR, which stands for Investor Relations. So Bonesupport space AB space IOR, and look at their October 24th Investor Relations deck, and specifically go to page 4. And what you'll see on page 4, Mike, our listeners love when I describe the shape of a graph. It's the reason our audience has grown so steadily over the years. They go, I'll tune in and I hope this lad describes a graph. Well, imagine the Nike swoosh fell forward a bit and it was even more swooshy. Imagine the silhouette of Mount Everest on your television room wall. Imagine a stain from a water falling from the shower in the plastic. That honestly, the revenue growth of Bonesupport to today is it's just honestly, it's so beautiful. It should be printed on Hermes bags. Hermes makes bags. It should be honestly. I just think you will rarely see revenue growth like this. It shows quarter on quarter revenue growth for its three main products, and it very seriously, folks, it would just is like a cliff edge going up, which is fine. We all know that the failings of only looking in the past, but that's bang up to date, and certainly we'd like to see momentum. But let me go back to those three headings.
Yes,
so
fair.
the first is revolutionary product and market potential. Well, Bonesupport really has made waves in the medical device industry with this, what was at the time a breakthrough product with Cerament. And it isn't just another bone graft substitute, it's injectable bone substitute that promotes bone growth and speeds up the healing process. Now, that's the differentiator, where there are other things you can inject in as bone substitutes, but when your patient has less downtime, faster recovery time, and that's due to its unique osteoinductive and osteoconductive properties. Mike, don't you know? I know you knew that already, but I don't want, let's not just show how intelligent we are. We're not going to go there. But what sets Cerament G, which is a different product to just Cerament, apart, is that it's the only orthobiologic solution available today that incorporates a proven topical antibiotic, which clinical trials have shown reduces infection risks and cuts down time patients spend on broad spectrum antibiotics by 3/4. And when you think of the orthobiologic market is projected to reach about $14.2 billion in size by 2033, Bonesupport really is there capturing, it's not positioned to capturing, it's suddenly gone into like a drift net on this particular niche market. Well, it's not a niche market, it is a mass market requirement for those who need this procedure. And it makes its current $2 billion market cap seem acceptable. So when I read out the market cap earlier, and it was 21 billion or whatever it was, I said, it says about $2 billion. When you look at that, it's out to address a 14.2 billion per year market opportunity by 2033. You can see that there's still room to grow. And by the way, it's worth mentioning, oh no, actually, I was going to say you can buy shares over the counter in the US, but I don't think you can OTC. Hold that thought, folks. Just have a chat with your broker. So that's the first thing. They have a revolutionary product with great market potential. The second thing is strong financial performance and growth trajectory. So I've kind of spoken about that. And you and I and every other investor are always on the lookout for strong financial performance and signs of sustained growth. So in other words, as I said already, the great rearview mirror and an even more exciting horizon. Well, Bonesupport definitely it delivers on both of those counts. And the company's last quarter saw net sales increase by 50% to Swedish kroner 238 million. That was Q3. And I mean, to see 50% growth is just unreal. The Cerament G in the US reached sales of 134 million in the quarter. And remember, this was only approved a matter of months ago. So we're looking at a business that has clearly not perfect, there's nothing perfect, but a really good product market fit. So the rear view mirror is there to be seen, as I described, and the future opportunities look great when you look at the size of the overall market. And then the third area I said, Mike, that I'd describe to our listeners is upcoming approvals and expansion opportunities, because it's nice to know that not only is the products that our business is delivering doing so for a big giant opportunity, but there's other things in the pipeline. Well, what's really exciting for me about Bonesupport is the future. And the recent FDA approval for Cerament G is used for treating open fractures, and it's already widened its market potential in the US, but there is more to come. The company is about to submit an FDA application for the use of Cerament in spinal fusion surgeries by the end of the year, which could be a complete game changer for spinal procedures that make up 58% of the global bone graft market. And then finally, Cerament V, this other product, is designed to combat certain antibiotic-resistant infections, and it's currently undergoing an expedited 510K FDA review process, the process that the FDA puts these type of products through, and it could speed up its market entry and be another revenue line item that we'll see in that lovely graph that looks like staying on the downstairs bathroom wall because the plasterwork upstairs, like it. So and then let's not forget their plans to break into new markets like Japan, which could further widen their market opportunities. Their storyboard to date has more or less been the story of Sweden/Europe and now North America, and now they're saying, right, let's go to Japan. And for investors, these moves suggest to me that it's really on its way to cementing its position as a leader in the orthobiologic field. Oh, Emmet, you old cad, you said cementing. Very funny. So, so that's Bonesupport. It came out into Nexus I a few months ago, and it is one I would truly love to own. And I do think, despite its rich valuation, it's a banger of a stock.
Brilliant. Yeah. I love how you focus that on what happens next for the stock and the products and the approvals and all the rest, because as you said, it's a very early stage company. It's in terms of its relative market size, a small company for what it could be.
Yeah.
And it's one of those companies that is very much based on the future. So I'm very interested.
Years and years ago, Mike, before we push on, let me just tell you, years ago when I was doing a piece for the Motley Fool, I undertook a study on what market cap positions a business most likely for 10x growth, because small cap investing has always been the area where you find hidden gems, and tomorrow's giants were once upon a time small caps, and all that is correct. But the market cap where you have most de-risked the business, and it's still, if it's in the right industry, has the most room to growth, is between a market cap of 2 billion and 10 billion. So as it happens, when I see a business that's 2 to 10 billion in valuation, I find it's a small green tick that goes on in my mind. And I saw Bonesupport in that area, and I just thought, yeah, that's nice. I mean, that at least favorably endears me towards it even further.
Brilliant. Okay.
Mike, hold on. I have another thing to say. Before I'm going to ask you about your one, I'm going to shamelessly plug Nexus II right here and now. So do you mind if I go ahead? I know I've interrupted you repeatedly.
No,
keep going.
No, it's important.
And another thing. No. Well, I mean, what I would say, and you and I were talking about this last night, the only thing holding me back from the 6 that are about to launch on Nexus II is our internal ethics policy, where we just don't do that. We don't buy, we don't front run anything. So Nexus II is launching on Monday. 2 of the companies that are going to be published at launch are headquartered in Japan. One is in Sweden, one is in Italy, one is in Greece, of all places. I mean, so rare to see a business merge out of Greece. And finally, one, you and I looked at each other when we saw its name. It's headquartered in the United States, and it is one we know for sure. And we've improved Nexus. We're launching it. I'm very proud of this product because I think Nexus I was a great booster for anyone's portfolio. It fuses state-of-the-art AI screening, real human intelligence advisors to identify companies that for the most part are unheard of but have giant potential, have strong momentum, and we're capping membership at an absurdly low level. Members will get the next cohort of stocks, which, as I said, is 6 Monday, and then they'll get many more in the months that follow. I think it's scheduled to have 9 stocks after launch, broadly being delivered 1 a month as we get to speak to key individuals from those companies. We never quote the individuals, the insiders, because we don't want it to be about them. It's about our research. And we have an early bird offering for existing Nexus I customers that we're going to extend to 7 loyal Stock Club listeners, only 7 listeners. Those who subscribe to Nexus I are getting a deal on Nexus II. But if you are not subscribed to Nexus I, drop us a line at pod@mywallstreet.com before we launch on Monday, and one of the team will get back to you with an absurd offer. So do it, folks. You don't want to miss this.
Brilliant.
No, hold on. I have another thing. I'm going to mess. So, right, Mike, hit me. Which stock did you pick from Nexus I that you think is going to grow, potential to grow at least 10x from today's levels?
Yeah. So I'm going to preface this by piggybacking on what you said about Sweden, the investing culture there. And not only does it lend itself to building great public companies, but it also lends itself to building great stocks. And what I mean by that is that there are these particular type of company, a holding company or a conglomerate or a serial acquirer, whichever way you want to kind of call it. But basically, these are really incredibly investor friendly stocks, essentially because they're run by investors. So Berkshire
Mm,
Hathaway is the obvious example. Warren Buffett is arguably the greatest investor we've ever seen, and he's laid
mhm,
out a blueprint for so many companies to follow in that same shape or form in one way or another. And then when you look at the top companies by market cap in Sweden, an awful lot of them fit into that shape or mold.
mhm.
So if you just look at Investor AB, Indutrade, AdTech, Lagerkrantz, Technion, which is a much smaller market cap than the rest, but it will hopefully get up to that stage at some point. And then the one we're
Mhm.
talking about today, which is Lifco or Lifco AB, which you'll
Mm.
probably see about. AB is kind of like LTD or
Yeah,
CO in Sweden, basically. Now,
yeah,
why I think this is a particularly relevant area of the market, especially for Irish investors listening in, is that we've talked about how punitive it is tax wise for to become an index investor basically in this country. Instead of buying ETFs, why not look at individual stocks that own portfolios of companies? So instead of trying to get that diversification from one index, you're getting it from an individual stock that is taxed in such a manner, but also owns, like Lifco owns over 200 companies. Now they're not going to be as
wow,
obviously diversified as the S&P 500, but there's enough variance in, say, Berkshire's holdings or Investor AB's holdings to act in lieu of an index. And then you can get more granular. You can look at a company like Danaher for biotech exposure, Lifco for industrials, Constellation Software for software, obviously. But the list goes on and on. And I think in my view, it's a handy workaround for a very annoying problem we have here in Ireland. If you isolate a couple of these conglomerates, and maybe if you just want to recreate the S&P 500 performance, add in the Magnificent Seven on top of that, I don't think you're going to be
mhm.
too far away in terms of tracking this. Obviously, it's not going to be word for word, but it takes away a bit of the stress of individual stock investing by knowing that if you buy one stock, you're actually
Yeah,
holding hundreds of companies.
yeah. That's overseen by somebody who does nothing but obsess on what makes a great business.
Absolutely, and it's that thing. It's like it's made these are instead of we always talk about like you're investing in a stock, you're investing in a business.
Mhm.
But with these kind of companies, you are actually investing in a stock and it's operated like a stock. Do you know what I mean? Spotify isn't going to talk about return on invested capital
Mhm.
in its
Mhm.
first bullet point, but Investor AB is. And that's the difference, I think, is just that emphasis on we're focused on shareholder returns because that's the purpose of this company. The companies we own have their own visions and functions, and when they do well, we do well. But we're concentrated on the cash flows from said companies because they go into our acquisition pot, which feeds more and X and Y and so forth and so forth. So from that perspective, that's why I think these type of companies are really important. And then especially from an Irish investor who's very sick of stuff like deemed disposal, they become even more
Ugh,
important. So,
yeah. So, what type of company does Lifco look for? Is it? Am I right in saying it's medical? Is it medical? Its thing?
so Lifco is all over the shop. Um,
Everything.
it
Oh,
kind
are
of
they the lads who'll do invest in a wheelchair maker, and then they'll do a bit of fiber optic, and then like so they
yeah.
literally don't. They're
So
right.
I actually have I have it written down here the full list of kind of what they've invested in. So
Give us a few of these.
they
Tell
own
us a
over
few of
200
them.
companies across a bunch
Yeah,
of industries. So it's possible to really kind of siphon down exactly what they do. But
yeah.
the three big we'll say markets they're in are dental.
Taxidermy, toilet plungers.
I think it's not far off when I read it out fully, but they're dental, demolition, and
Huh?
then what they call
Oh yeah.
systems solutions. But it's better if I
All
just
right.
read it
What's
in
that?
full, the full
Yeah, go
breadth
on.
of what they do. So Lifco is involved in the distribution of dental equipment such as disinfectants, saliva ejectors, bite
Oh,
registration and dental impression materials, bonding agents, and other consumables, as well as developing and
right.
selling medical record systems. The company also operates a dental laboratory, normal
Yeah.
enough so far. In addition, it
Yeah.
develops, manufactures, and sells demolition robots and crane and excavator attachments to construction and earthworks, snow clearing, demolition, pipe and cable laying, forestry work,
Yeah.
scrap handling, and railway works.
Yeah.
Further, The company engages in the contract manufacturing of electronic components, stainless steel products, galvanized products for use in the security and alarm, industrial applications, telecom and IT, food products, pharmaceutical industries, the waste handling and recycling of tires, wires, refrigerations, aluminum products, electronics. Additionally, it offers vehicle racking systems for service vans, equipment for sawing and handling of sawn lumber, as well as pellet mills, cleaning and sealing of pipes, electrical supplies, LED lighting, measuring instruments for the surveying and construction industries, the telecom equipment, fiber market, and aluminum cabinets. So,
Can you imagine the sheer bedlam that their Christmas party is like? It's just the lad who does rubber pellets is trying to have a professional chat with the guy in ceramic bowls. And then did you say spitting machine or something?
a saliva ejector. So,
Oh,
do you know the
an
thing that
expectorate. Like expectorate is the polite word for spit, as far as I recall. So what on earth? And tell me, sorry, go on. Tell me, what is it?
it's the?
What's the
Do you know when you go to
expectorating
the? Do
machine?
you know when they go to the dentist and they hook that
Yeah,
thing in the suction machine?
yeah.
That's it.
Oh, yeah.
Yeah.
Oh, it's inverse. It's, oh, well, I suppose, yeah. Okay, right. Let's not. So, I see. So they move rubble, they move rocks, they smash, they lay fiber, they drop, they kill forests, they suck the saliva out of your mouth. I mean, that is an incredible. That is diversification.
Diversification is a good word
Stuff you
for it.
never
Yeah.
even thought of.
Yeah.
Yeah, it does. Yeah,
And it
you're
comes.
sort of the king is.
It doesn't sound like it, but it actually comes down to a rather simple acquisition strategy, which is just searching for smaller
Yeah,
businesses with histories of profitability that own dominant
yeah,
market share in niche industries. So
right.
they're not while those businesses read out like that sound like the biggest hodgepodge ever, they actually have quite
Yeah,
a lot of similarities in how they operate and how, say, this business is structured in terms of the wider market which it's in. So this is
mm,
why it's found itself in between dental equipment and demolition tools, but it actually makes a lot more sense when you realize, okay, well, they have a team of experts that are just constantly on the lookout for certain acquisition candidates which fit this criteria. So, and
I
that,
think I watched a podcast with these two, the two chief investment officers who are effectively the Warren and Charlie, Warren Buffett and Charlie Munger brigade, but their kids, their children, in my eyes, as I'm 49 and don't have much longer, I can say that. But like, they were really, really smart. These businesses are thrown off unencumbered cash like Goodo, and they buy it for a multiple of that, and they always seem to make a good purchase.
and that's it. Like, as in, for the most part, while they look for certain ways to optimize where they can lend their hand, the businesses
Mm,
mostly just run independently. And then the cash
mm,
flows from that business, instead of going to fund that business alone, will go to fund further acquisitions. And it's unbelievable the results of this, because it is quite simple in theory, anyways. But
yeah.
it's been able to compound revenue at 14% a year since 2014, and cash flow at 24% a year in that space of time,
Mm.
which is really incredible. Like, is in you're delivering that kind of result over a decade, and that just starts adding up and adding up and adding up, and we can see in stock price as well. Do you know what I mean?
Yeah,
And it
yeah.
also,
What actually? Sorry, go.
no, I was going to say what what it also does is make it a slightly easier as an investor too, because you're not expected to know the ins and outs of every company within its portfolio. Do you know what I
Yeah,
mean? We don't have the capabilities of analyzing saliva ejectors at the same space as analyzing fiber optic cables, but we don't have
right.
to. Do you know what I mean? We can kind of just say,
Yeah,
okay, this management team and this business system, I suppose, in place has been shown to deliver results. The track record is there, and all we want to see is more of the same.
yeah. It's funny because every business, I think we said, we podcast so much, I don't even know if I said it in my dreams or to a person or to a microphone, but every business has its own specific metric that matters. But the one metric that matters to every business is bottom line profit. So whether we spoke about Netflix subscriber or this, but like whether it's gallons of spit or heads, number of heads adjusted or whatever it is, that's the industry or the company specific, but really bottom line profit is the one that matters. And ultimately, every business lands there. And it's funny when BCG and Morgan Stanley did that report about revenue is the single greatest revenue growth is single greatest driver of share price performance. The reason is because it shows the business has a model that can be rolled out and ultimately will turn to profit.
Yeah.
So the fact that these guys have gone straight to the bottom line and they look for businesses that are throwing off cash. Another thing springs to mind when I researched and pitched a business called One Water Marine for Horizon, which I bought shares in and subsequently sold at a loss, unfortunately. What I learned from that piece of research and speaking to one of the founders in there was that there are a slew of boat operators in America who own like little boat service stations or boat shops or part shops or insurance shops for boats, which is a huge thing in the United States and lakes all over America, that are mom and pop operations, and they don't know how they're going to get their payday. They don't know what to do with the business. They're getting on, they're in their 60s and they're in their 70s. And One Motor Marine pulls up and goes, "How you doing? Do you want us to take this over?" They're like, "Here's the keys. Thanks. Give me a wage and give me a check." And I think from what you're saying, there's an element of that, because if you are in quite a niche business, you generate a bit of profit. It's nice when one of these operators rolls up and says, "Hey, we'll give you shares, we'll give you a check, and we'll help you get more efficient." So that mom and pop mentality exists across so many smaller businesses. And I'd say Lifco have identified that and capitalized on it effectively.
Big time, yeah. It's a pool of motivated sellers, and you see it a lot with the smaller businesses. Obviously,
Yeah.
company like Constellation Software could kind of fit in there too. I know it's buying a specific like type of company, but like in terms of between like 1 and 10 million buying price, it just, they're those kind of people who are ready to retire or ready for their payday. They're so ready to get out, and it means you get a better price as well.
I've been recycling used rubber tires for 48 years, and I don't see any way out of this. Hold on, who's this pulling up to drive? It has a Lifco written on the side. Geez, how are you lads? Come on in here. Do you want to buy me a rubber tire rich recovery facility? Yep. Okay, have it. You can give us a price for a bacon sandwich. You can have it. Yeah, it's a nice business. And so, what's its market cap, Mike?
Its market cap is about 13 billion. So it's a large company. It would have to get to very significant size to 10x. But what's great about this business is you don't really need anything revolutionary to happen. All you need to happen is that it keeps on doing what it's doing. So I want to touch on the CEO, Per Wilhelm Waldemerson. So he's been in the top job since February 2019, and in that time frame, the stock has been a 4-bagger and some change since, in the space of 5.5 years. He's a young man. He's only 47. In CEO terms, he's a young man, and he's got some great guidance on board too, in the fact that Carl Bennet, who's one of Swedish richest men, he has a controlling share of the company from his own holding company, Carl Bennet AG. So between those two, we kind of have a legendary investor in Sweden who he's major controls in about $5 billion companies up there. And his overarching presence on the board, combined with this kind of young hotshot who's overseen the company 4x in the space of 5 years, is there to kind of oversee the long-term vision of the business, because all we need is it more of the same. Does that make sense? It's like all we need is a constant kind of 1% better every day, and just keep going.
Yeah. It's a lovely business. I'm quite familiar with it. I mean, I didn't know it did all that tire and expectoration machine and all that stuff, but but I knew they were very good acquirers, and the discipline that those two fellas are applying is, I think, is the stuff that's really going to generate the long-term returns. Lovely business.
Yeah, absolutely. And it's a great way of investing, because you can kind of offload to the experts a bit. Do you know what I mean?
Totally. Yeah, you can sleep soundly knowing that there's this smart guy in Sweden doing it for you.
Yeah. And as you said, the mini Berkshires of the world, this is definitely one of them.
Yeah. And there's a proliferation of them, you're right, in recent times, and a couple have made it to Horizon, a couple have made it to Charging and Fearless. One is on the longer conveyor belt for Nexus II, and we're trying to speak to the chief investment officer in there. So we know, we're familiar with the businesses. We like the businesses. They're great. They are great. When done well, they're just done well. Just look at Berkshire, just look at Constellation. We don't need to sell it. So that's it, Mike. We've pitched Bonesupport AB, and we've pitched Lifco. It's AB as well.
AB, yeah.
Lifco AB, and we are launching Nexus II on Monday, and it is our best effort at finding the next 100 baggers from the exchanges all over the world. a beautiful business in America, a beautiful business in Japan that I'm particularly excited about, a great business in Greece, and Marie has put forward an absolute beautiful business from Italy. And when we dived in and went deeper on it, it's just a great company. I think that's the first six. The first cohort are ready to go. If you want those names, if you want to subscribe and get a stock every month for the 9 months that follow launch, please do email us at pod@mywallstreet.com to get a special deal, which will expire the minute the service goes live.
Brilliant. Emmet, thank you for joining me, and thank you everyone for listening. We will talk to you next week.